And now on the line with us, we have Mr. Paul Gambles, the managing partner of MBMG Group, Asia's foremost advisory practice. Good morning, Mr. Paul.
Good morning.
How are you this morning?
Very good, thank you. Yourself?
I'm good, thank you. Mr. Paul, as Jim Rogers has predicted, the oil prices will keep rising because of global shifting reserves. What do you think about this?
Well, look, I think the first thing you've got to say is that Jim Rogers is an extremely smart and extremely successful investor. But he does seem to have been caught out of more than a few times recently because he's aligned himself so closely with a position of bullishness about long-term increases in commodity prices. Now, what we see with all commodities, and oil is probably one of the better examples, is a very small change in supply or demand can have a big impact on the price. And what's happened, we think, over the last couple of years or so, is that just the sheer amount of liquidity that's been in markets, in financial markets, has tended to drift towards commodity markets, and that's really what's pushing the prices up here. So we don't think that it's the peak oil argument. We think this is much more to do with the fact that all assets at the moment are being driven up by a wave of liquidity, and oil prices have been particularly sensitive to that. So we think it's much more to do with the liquidity that's in the market. Now, we think that position is going to probably continue for a little while longer yet. We don't see it ending straight away, so we wouldn't be surprised if oil prices went rather higher than they are now. But ultimately, we don't think that this is a story that's got a long time to run. We think it could end up running out of steam, and we think that when liquidity starts to drain out of the market, the oil price will then fall back quite strongly.
So far, what are the impacts of bin Laden's death on global financial markets?
Yeah, that's really interesting because at the moment, I don't think the markets really know what to make of it. It's not a financial event. It's not an economic event. And therefore, when markets get dealt something like this, they're not always sure how to handle it. And we've seen a lot of volatility. We've seen, increases and decreases in just about all assets or currencies. And they're really, trying to figure out, I suppose, what the potential implications of this are. I mean, I think, our view is that, what we've seen here certainly isn't the end of Al-Qaeda, and it's certainly not the end of terrorism. This is the death of one man that we're talking about. And I'm certainly no political expert, but we know that geopolitical tensions are running very, very high in the Middle East at the moment, in the Middle East and North Africa area, and I think that this is potentially something very, very incendiary to throw into that powder keg. So, whenever people have grievances and they have weapons, well, you get terrorism. That's the outcome. And I think there's got to be a worry going forwards about any reactions, any impact, any responses to this, particularly in such a time that is so charged. So there's so many concerns across so many Middle Eastern countries right now. So I'm not sure that we'll see any great impact immediately, and I don't think we've seen a clear impact so far. I think we've seen different views on different days. People are changing their minds about what this actually means. I think it'll take a long time for it to work through into the financial markets as to what the economic impact, what the financial impact is, and that'll really depend on what the geopolitical consequences of this are.
Now, coming back to Thailand, as you know, Prime Minister Abhisit Vejjajiva, he prepares to call for the new election. What is your take on the Thai economy?
We've been very bullish on the Thai economy in general for quite a while now. We're actually very bullish about the entire ASEAN region. We think that the fundamentals here now are reaping the benefits of a lot of difficult decisions that were taken back in 1997 and 98 and in the aftermath of the crisis then. So we think that ASEAN generally is very strong. We think that the Thai economy is doing very well. We've got some concerns, which are that I suppose we're expecting a major correction in the U.S. economy and in global asset markets, either perhaps later this year or next year. And I think that Thailand won't be immune to that. So I think that we've got to be ready for a period of slower growth at some point. We've got to be ready for a period of asset price corrections at some point. And I think it'll take a little period of time for that to adjust out of the system. When it does, when all the dust settles on that, we expect Thailand to be in a very strong position, but it will take some time for an adjustment from where ASEAN countries and Asian countries are largely reliant currently on exports to Western nations to change from that position to a much more domestically or regionally focused position. So we think there's going to be a period of adjustment, but coming out of that, we expect Thailand to be very well placed. So for the long term, we think the position's good. We think in recent years, in general, the policies of Finance Minister Korn have been extremely solid. I was interested to see that Nopakun gave him quite a hard time on your program recently, and I think that most of the things that Korn said were actually right about the policies and the justification for the policies. I think perhaps you could have given some better explanations of why Thailand should be using subsidies right now to keep the growth going and to stop inflation getting into the system. But we're not really too worried about inflation unless there are any policy mistakes by either the Bank of Thailand or the Finance Ministry. And so far, the Finance Ministry, at least, seem to be committed to doing many of the right things by using subsidies to prevent inflation becoming structural and embedded in the system. So longer term, I think it's a very good picture. In the short term, I suppose my biggest concern about the markets would be that we just don't see that market prices are really reflecting any kind of discount for political risk. When we're going into an election potentially like we are now, when the outcome is far from clear, when there might be a lot of changes in terms of the makeup of the government going forward, and no one really quite know what they are. I'd like to see a bigger discount in asset prices. So I think right now we probably wouldn't be buying the set. I think we'd probably be looking at some of the other regional indices as being better value than the set, just until the election period is over and the dust settles, and we all know exactly what we're dealing with in terms of Thai politics going forwards.
Right. Well, thank you very much, Mr. Paul.
Thank you.
You're very welcome. Good to talk to you.
Have a nice day.
You too.